Midday trading can slow down, flat out. We all know mornings, most volatile, biggest moves, etc. And midday trading is still a great way to trade, but you need to know how to avoid the choppiness, the sideways stocks, and particularly the fake out breakouts. But with the Flux Algo, I'm able to spot these high probability setups when most traders are checked out, thinking there's nothing out there. Now, in today's video, I'm going to show you how I use the Flux Algo, what it does, the pattern it looks for, as well as a great example from literally about an hour ago. This is the great things about this. And what's awesome about using algos is you can stay dialed in midday, letting the tool do the work, and you can avoid all the noise and simply wait for the real opportunities to appear when the algo identifies the chart pattern and that setup for you. What the Flux Algo does is it looks for a very distinct pattern, and longtime subscribers to the channel will know this pattern well. If not, definitely check out the other videos talking about the VWAP Hold Intraday Breakout pattern, okay? And what we're looking for here is identifying those stocks that still exhibit strength into the afternoon and aren't those kind of do nothing or, worst case, late day faders. So I'm going to draw that pattern and explain a lot of the criteria we look for. So let's draw a line and we'll put that, let's say noon, okay? Middle of the trading day, noon Eastern. So we've got that stock that was crazy all over the place, created a bunch of trading opportunities early in the day, which is great, but that volatility can spook a lot of people, stop you out. A lot of people just don't like that, okay? You got to be really, really quick with your entries and exits, and if you make a mistake, it can get bad real quick. Now, these stocks spike huge, great when it goes in your favor, but it can just chop out new traders, and if you don't have a plan, if you don't have a stop loss, it can turn trades into big losses. Now, what's great about this pattern is we're waiting specifically for the afternoon and looking for that stock to smooth out. Now, there's still going to be ups and downs and movement to that stock, which is what we want. Remember, we want volatility. Without volatility, we can't make any money. If stocks just go up a penny, down a penny, you can't make any sort of real profits on that. But when this pattern appears, it creates many great things. First of all, smoother moving stocks, safer plays, and it allows you to actually really be able to map out a trade plan, which is so important. And when I say trade plan, that's having a defined entry, stop loss, and profit target so that once you're in that stock, you know what you're doing. You're not guessing, you're not holding, you're not hoping, you're not justifying or even overstaying. So what we're going to look for is that stock to tighten to VWAP. Now, you'll notice early in the day, this stock was a huge mover, big pushes, big pullbacks all over the place, but it was a long way from VWAP. That's because VWAP starts building in the beginning of the day, and when those stock, and it's a lagging indicator, which is actually what we want. Sometimes people hear lagging, they think it's bad, but it's actually building along with the stock early in the day, so it's not going to make the wild moves like the stock price does. It's volume weighted average price, which is an amalgamation, a combination of volume and price action. So you're going to have these stocks that are way above VWAP early in the day. Then as the stock starts to slow down and consolidate, it will tighten to VWAP. So notice how I've got these big troughs and valleys here, long way from VWAP. Now as we head in the afternoon, because we have that price action from the afternoon or morning as well as the afternoon, it's going to start to tighten up to VWAP. Then what happens is you're going to start seeing something happen right about 2 p.m. each day. Now, what 2 p.m. is significant because that's kind of what we call power hour. So you've got your kind of crazy market in the morning. That's usually, really these days, 4 a.m. to about 11 a.m. roughly. That's when the stocks are the most explosive, most volatile. But as I mentioned, as new traders, it can be really difficult to trade that price action. Then from about 11 to 2 p.m., you've got that midday lull. That's when I recommend sitting on your hands, getting things done, tracking your data, filling out your spreadsheets, running your scans, studying. It's a great time to study. Or, I mean, a lot of you are part-time traders. Get your work done, okay? What I would do, don't tell your boss I said this, focus on trading early and late day. Get your work done in the middle of the day. Listen, we all know, especially a lot of the remote jobs and white-collar jobs, I mean, you can just bust your hump during the middle of the day and get a full day's 8 hours working, and then you can trade outside of that. Thumbs up. So anyway, focus on the things, errands, like just things you have to do during the middle of the day. Then when we start seeing these stocks, big runners, low float, have news, all those box checkers I talk about. By the way, I just dropped a recent video, check it out, on those box checkers, what we look for. So in this instance, for the sake of time, just assume this stock matches all of those attributes. Now it's consolidating above VWAP, and you're going to be looking for that kind of building of volume into 2 p.m. Now, the reason you see that is everyone knows this pattern. I mean, this isn't some like undiscovered pattern that no one knows about. People know when they see this emerge, there's a good chance that this stock is going to make that second leg move into the afternoon and probably gap up the next day. So that's another great thing about this pattern, is not only does it create great trading opportunities with much higher risk to reward ratios and much more safety, which is what we want as new traders, it often creates a massive amount of what we call a gapper, okay? And those of you under the PDT, the pattern day trader rule, couple notes. Definitely, if you're new, consider switching to a cash account, okay? Cash accounts give you much more flexibility. You're not bound by the PDT. I know margin is attractive, but as a new trader, I'd beg you not to use margin anyway. It'll just get you in trouble. But if you don't want to switch to a cash account, if you're under the PDT, this is your pattern. Because if you're trading in the morning under the PDT, odds are you're going to use up all your trades on Monday, and then you got to sit on your hands till the following Monday. Now, one good thing, on a note, as I'm recording this, so happy to see this, but it has been decided that the equity level for the pattern day trader rule is going to come way down. Now, I haven't seen confirmation. Currently, it's $25,000. I've heard it's going to go to $2,500. Now, we'll see. It is the government. It's the SEC doing this, so it'll probably take 20 years or something. Who knows? But it is good news. Good headline. But for the short term, if you've got under $25,000, you're under the pattern day trader rule, which means this is your pattern. Now, that being said, under a cash account, think about it. High risk to reward, good likelihood of gapping, smoother moves. It's attractive to you if you have a cash account as well. So just a quick aside. So now what we're going to look for is that stock to break out of, let me denote that range of consolidation, which if you notice, we're using a very tight band of VWAP. Now, what the Flux Algo does, and this is the cool thing, is it knows to look for box checkers, to look for those very volatile stocks in the morning that are now consolidating within a very tight band of VWAP into the afternoon. Now, it's basically 2% above or below VWAP, and if the stock is in that range, we have high certainty that it is coiling, it is consolidating, and it's going to attract buyer interest into the close, because as I mentioned earlier, everyone knows this pattern. It's not like some hidden secret that only I know about or a few people. Everyone knows when they exhibit this behavior that there's a good chance it's going to run into the close and gap the next day. So it becomes, at the end of the day, a self-fulfilling prophecy. If everyone knows this pattern, trades this pattern, that's what increases your odds of success. So as we see this, we're not going to buy the stock while it's chopping around. While it's in that band, it's still within that consolidation range of VWAP, which is blue, and then the band, the upper end of the band is the green, lower end of the band is the red. Now, we're going to wait for that stock to break out of that band. That's the buy. And then our stop loss, this is why I love this pattern, because it writes a trade plan for you. Our stop loss is what's called a VWAP fail. So if that stock falls below VWAP, you cut it. It failed to follow through, failed to continue, broke the pattern, so you take a small loss. Remember, we're trading a really tight band here. So this is a great pattern for small accounts too, because when they fail, puny losses, and when they go, they really go. So now we have an entry and a stop loss. So let's say that stock fails. You're losing a small percent, really tight stop, move on to another VWAP hold, move on to a different pattern, or just wait to trade the next day. Then, as I mentioned, you're going to see this exact behavior when it breaks that band. That's where the volume comes pouring in, which gives you confidence that you're riding with the buyers. You know, when we're long a stock, we want to join the buyers. More buyers there are, more buy orders. Think about it. What makes a stock go higher? More buyers than sellers. So when we break this pattern, we see the volume increase. We have high certainty, can't guarantee anything, but we have high certainty that we're joining a bunch of other buyers. That's what we want. More buyers than sellers that pushes that stock to, much higher levels into the afternoon. Now, let's fast forward, and then I'm going to talk about a specific example. But when this stock pushes into that 4 p.m. close and manages to close at or around the high, that's your signal to hold this stock overnight, because if the trend is strong into the close, odds are that trend's going to continue the next day and the stock is going to gap. That's why I love it for people under the PDT or small accounts, or really any account size, but really with that pattern day trader rule. Now, the stock I want to mention is AQMS. Now, we'll bring up an example of this one, and this is where the Flux Algo comes in. So you can look for this pattern, rewatch this video if you have to. I would highly recommend it. This is the number one safest and highest risk to reward pattern out there. I beg all new traders to start with this. Again, if you've been on the channel for a while, you've heard me say it probably 100 times. So with AQMS and the Flux Algo, because the Flux Algo actually identifies this pattern, maps out the band, gives you entries, exits, stop losses, and goals, writes out the trade plan for you. It identified AQMS today, which was absolutely a perfect play. I mean, it spiked early in the day, consolidated, broke into the afternoon. There were a bunch of traders. I think we got a couple screenshots from them posting in the chat that nailed it. 60, 70 cents a share. Beautiful risk to reward. Played out about as good as they get. Please study this pattern. Please use it. If you're struggling in the morning, in my opinion, is for more advanced traders. Now, sometimes people push back on me in this, and they're like, well, I want to trade in the morning. And I simply say, you're probably not ready. I know the biggest moves happen in the morning, but you need experience. You need discipline. You need to understand risk management. You have to understand that these stocks can spike big, but they can pull back really hard. So I tell people, do what I did. Get profitable in the afternoon. Get to the point where you're consistently making money. Get to the point where you've built your skills and your discipline, then go to morning. So many people do it opposite. They start in the morning, get chopped up. Well, actually, listen, I've been doing this 20 years. I've made every mistake in the world. I did exactly that. I thought I had to trade in the morning to make money, lost money for years, started trading in the afternoon, got profitable, got my discipline and my rules down, and now I trade every morning. So don't mix up the order. If you're struggling or if you're brand new, afternoons are for you. Sure, we don't often see 200% runners in the afternoon. It's very rare. 20, 30, 40%, very common. And the great thing is, when stocks follow this pattern, when they do fail, they typically just kind of slowly trickle back to VWAP and you cut it off. So less panicking, less rushing, less emotional roller coaster, and it's the best way to really get your feet wet and build that small account. So that being said, guys, use the VWAP hold pattern. I beg you, if you're struggling in the morning, just put it to the side for now. Focus on the afternoons.